All right, today we're going to talk about what might just be the boldest bet in the corporate world right now. We're talking about MicroStrategy, a company that has literally gone all in on Bitcoin, tying its entire future to digital gold. So let's just get right to it. The big question on everyone's mind, the one that's got analysts and investors buzzing, is this. Could one single share of MicroStrategy, we're talking MSTR, really hit $4,000 in just 5 years? I know, it sounds kind of crazy, right? But believe it or not, there's a whole case built around it.
Yep, there it is, $4,000. And look, this isn't some number someone pulled out of a hat. This is the base case prediction, the starting point, from a pretty serious financial model that's getting a lot of attention. I mean, just to put that into perspective, that would be an absolutely massive jump from where the stock has been trading.
But here's where it gets really interesting. That $4,000 number, that's not even the optimistic scenario. No, the people who believe in this model are saying that's actually the conservative guess. It's like that's the floor for what could happen if things really start to take off.
Okay, so how on earth does a model even spit out a number that big? Well, it all comes back to the company's pretty unique strategy, this all-in bet on just buying and holding as much Bitcoin as they possibly can. Now, if you look even further out, say to 2030, this model gives us a pretty wild range of possibilities. The low end is still $2,500 a share, the medium case, $5,700, and the high case, well, that goes all the way past $11,000. The point is, no matter how you slice it in this model, the numbers get huge, and they get there fast.
All right, let's pop the hood and see how this thing actually works. Because, this prediction isn't just magic. It's all based on a very specific model that ties the company's value directly to all that Bitcoin it's holding. It really all boils down to just 4 key things. First, you guess how fast Bitcoin's price is going to grow each year. Second, you figure out how many new shares the company might create. From there, you can calculate how much Bitcoin is backing up every single share. And last, you slap a final valuation multiple on it. See? It's a formula, and it's all about measuring the one thing they care about.
And this really gets to the heart of the argument for being bullish, right? The claim is you don't need these crazy, heroic assumptions. You don't need Bitcoin to go to $1 million tomorrow or for the stock to be valued at some insane premium. The model suggests that even if you're kind of conservative with the valuation, the math still gets you to that $4,000 mark. Behind this whole strategy is a really unique, kind of unconventional way of thinking. And it's all driven by their executive chairman, Michael Saylor. For him, Bitcoin isn't just a tech thing, it's not just a currency, it's something way, way bigger.
So Saylor's big idea is that Bitcoin is a totally new kind of asset. He calls it digital capital. And yeah, he's the first to admit it's way more volatile than things like gold or real estate. But he also argues that its potential for growth is like 2 to 4 times higher.
And honestly, this next part is maybe the key to understanding how they think. For most of us, volatility is a bug, right? It's a problem you try to avoid. But for them, the volatility is the feature. Those huge price swings, that's what creates opportunity, what gets people talking, and what lets them raise money to keep their strategy going.
Okay, but let's be real. When your whole strategy is built on embracing crazy volatility, you're going to get some tough questions. There's going to be a lot of criticism from the market, and for good reason.
So the first question is the most obvious one, right? If this strategy is so great, why did the stock get absolutely crushed at times? I mean, dropping 60% in a single year.
Well, according to the company, that's not the strategy failing. That is the strategy. It's working exactly like it's supposed to. They've basically engineered the company to be like an amplified version of Bitcoin. So when Bitcoin goes up, the stock is designed to go up even faster. But the flip side is, when Bitcoin goes down, the stock is going to fall even harder.
And that brings us to the ultimate nightmare scenario for anyone who's skeptical. What if Bitcoin doesn't just have a bad month? What if it crashes, like 90%, and just stays down there for years? What happens to MicroStrategy then?
The leadership team seems incredibly confident about this. Their answer is pretty simple. We'll just refinance the debt. Their thinking is that even if the price is way down, Bitcoin is so volatile that there's always the potential for it to bounce back, which makes it good collateral. They seem to think lenders will always be there and that the real risk of them going under is, in their words, minimal.
So the bottom line for them, the point they keep hammering home, is their runway. They say they have enough cash on hand right now to pay all their bills, all their debt, all their dividends for 2.5 years.
And that's without raising more money or selling a single Satoshi. All right, let's switch gears a little and talk about what the company thinks is really going to drive the price of Bitcoin in the future. And spoiler alert, it's probably not what you think, especially if you've been in the crypto world for a while.
There's this long-held belief in crypto that the price of Bitcoin has a sort of natural floor. And that floor is based on how much it costs the miners to actually produce a new coin. The logic is, it can't really trade below the cost of creating it for very long, right?
But Saylor basically says that's old news. He thinks the miners are becoming, well, almost irrelevant to the price, a third-order effect. He says the real action, the big money that's going to move the needle, is Wall Street. We're talking about massive banks offering credit backed by Bitcoin and all these new digital financial tools. He thinks that's going to have like 10 times more impact than whatever the miners are doing.
So when you boil it all down, the entire MicroStrategy strategy, their whole reason for being, rests on this one powerful idea. It's a bet, a huge one, that over the next, say, 4 to 8 years, Bitcoin is going to absolutely crush the performance of traditional markets like the S&P 500. It's as simple as that.
Which leaves us with this final question for you to think about. Is MicroStrategy a pioneer, showing us the future of how companies should use their money by embracing this new digital asset? Or is this just going to go down in the history books as the biggest corporate gamble of all time?